Welcome to this week's episode of the Stockscores Market Analysis. Simple, straightforward analysis that will help you understand where the markets are likely to go in the near term and what to watch for. First chart this week is the chart of the S&P 500 ETF, SPY. I'm on vacation right now, which is why you're just seeing my screen. Normally, of course, I would have my face in this as well, but I'm in the middle of the ocean somewhere on a cruise ship. So let's get into the S&P chart and just keep it simple. We're going to draw some lines. Here is the downward trend that we had last year. Then we had an upward trend, and then we had this upward trend that was recently broken. And so now we are in a downward trend. All right, so that means sellers are in control. What we're waiting for is a break of this downward trend line, much like we had here, or perhaps this little one that was here, which led to the rally that we had in January. So what's important is that we have come up to the trend line. We got stuck. That's what we expect to happen. The question is, will we break the upward trend line from this slight rising bottom? So that's what I want you to watch for next week. Does the market break up through, say, 397 on the SPY after making that rising bottom? If it does, then we should see an improvement in the market. It's been not great for the last 6 weeks because we've been in a downward trend, and you never want to fight the trend. Now, let's take a look at the Russell 2000, which represents the small cap US stocks. And this market is much weaker than the S&P 500. You can see the dramatic weakness there. And that's because there are a lot of those banking stocks that have been beat up by the banking crisis related to Silicon Valley Bank and others, and it's really dragged this down. So if we think about this chart on the 3-year weekly chart, we'll see that this market has been stuck sideways for many months, and that has meant that for retail traders, which tend to trade these small cap stocks, it has been a lot more quiet. Now we have retraced, that means fallen back down to support at this 165 level, roughly, a little bit above 165. We're actually at 171.80 on the IWM, but we got pretty close to that support level this week. So I do think this market is likely to bounce higher. I would call this market neutral in the long term, but when we go to the short-term chart, which is the 1-month chart, you can see that the trend is still down, and therefore it is bearish in the short term. Now, the S&P 500 is neutral in the short term and neutral in the long term. The Russell, small cap stocks, is bearish, negative in the short term and neutral in the long term. Well, where is there some better markets? Let's go to technology, and that is in the NASDAQ market. And you can see here that we are actually building rising bottoms already. And if we look at the different time frames that I like to look at. So let's start with a longer term 3-year chart. Keep it simple. You don't have to plot a lot of indicators to figure out where the market's going to go. There's your downward trend line. It was broken. Now we're starting to build rising bottoms. And this week, technology starting to tickle through this resistance level. So this is a decent looking chart. I would say almost bullish. Pretty good. I like that the stock scores have risen. You can see that the stock scores indicators have risen here. They were negative all through this downward trend, and now they're starting to move up, and that is because we're starting to build rising bottoms and break through resistance. So the area of strength in the market has been technology. Now, another area that is strong or makes up a lot of the NASDAQ market is biotech. And so an ETF for biotech is IBB, and it represents the NASDAQ Biotechnology iShares ETF. And there you see on the daily chart who's in control. Sellers. Look at the scores. So you've got large cap tech, a lot of software companies, that kind of thing doing well, but the smaller biotech stocks, which are also a heavy contingent in the Russell 2000, they're weak. So again, for that retail trader who likes to trade these biotech stocks, it's not looking all that great. How about the Canadian market? T.XIU is the ETF I like to look at. It represents the TSX 60. And we'll start with the daily chart. You can see there the daily chart is moving down. It is at support, so it should bounce. It hasn't really given us a sign of bouncing yet, so you want to be fairly cautious. Let's take a look at the 3-year weekly chart of the TSX 60. All right, here we have it. So what's the dominant trend? Is it up or down or sideways? You can see very clearly it is sideways. So we're going to call this a neutral market. What about in the short term? Go to the 1 month chart. In the 1 month time frame, you've got falling tops. And so the Canadian market is bearish in the short term, neutral in the long term. Well, what about gold and oil? They have a strong emphasis in the Canadian market. So let's take a look at GLD first. It has been one of the hot sectors in the market for the last number of months. And you can see here, gold rising. It's getting a little toppy, I would say. Why? Because if I draw a line across these bottoms, I'm far above that line. And that means that we are overbought and likely to pull back to the line. Doesn't mean the trend is over. It just means that it's risky for that trend to continue. How about on the 3-year weekly chart? Here you're going to see an issue because gold, in all of this strength that it's had since November, has risen up to the long-term resistance level. All right, so here's that ceiling. It's kind of hit it here and here. So we're very close to that now. We should get up into the 185, 190 level, which is more or less where we're at now, and then get stuck and pull back to that trend line. So that's what I expect to have happen in the next few weeks. How about oil? USO is one of the ETFs that you can look at for oil. There's others. BNO is another one. So let's take a look at USO. Let's start with the short-term time frame. We're going to go on a 1 month chart. 1 month, we'll make it a 2-hour chart. So each bar on this chart is 2 hours. The buyers lost control here, and then it started to build falling tops. That was March 7th. We had a little bit of a bounce back rally, but all that did was bring price up to the trend line. The market was oversold. It bounced up until we can break this downward trend line from a rising bottom. This is a negative market. So it's bearish in the short term. Go to the 3-year weekly chart. And again, I use these little quick time frame links at the top of the charts and Stockscores. These are free to use. You can go to stockscores.com and punch in symbols of any market that you want to look at. And here you see a big problem. Why? You had support. You had falling tops into support. You had the long-term upward trend line, something like that. And we broke down 2 weeks ago, stalling a little bit because we're oversold. But I think the oil market more likely to move lower than higher. Well, interest rates have been the big story over the last few weeks because of the banking crisis. You have seen money go into treasury bonds and the bond market in general, a safe haven. That has brought interest rates down. This chart, TVT, represents the inverse of 20-year treasuries. And I always like to show this because it really shows what interest rates are doing. It's not based on interest rates, it's based on the bond market. But if this is going up, that means interest rates are going up. If it's going down, interest rates are going down. And you can see in the month of March, interest rates have fallen. They're now at a support level where we should see a bounce, but this may be supportive for stocks. And that's probably why you're seeing that strength in those large cap tech stocks, perhaps that lower interest rate story, plus not being in the banking sector, is helping that sector of the market. All right, let's look at some currencies. UUP is the ETF for the US dollar, and an important one for commodities, important one for the bond market. There is the downward trend line on the daily chart. We've pulled back this month in the US dollar as the bond market has gone up, interest rates have gone down, and that makes the US dollar a little bit less desirable, so it falls back. But let's take a look at the big picture, the 3-year weekly chart of the US dollar. And what we're going to want to look for here is where is that long-term upward trend line. So there is the long-term upward trend line. US dollar ran away from trend. Such a simple rule. When price runs away from the trend, eventually it's going to come back to it. It did. It bounced. The question is now, is it going to break down through that upward trend line? Hasn't happened yet, but that's what I would watch for if you're thinking about shorting the US dollar or doing something that benefits from a weaker US dollar, watch for the break of that upward trend line. Well, a lot of you love to trade cryptocurrencies, and so let's take a look at something that is a good proxy for Bitcoin. It's not exactly Bitcoin, but it is a Bitcoin ETF. I'm going to look at the 3-year weekly chart. You can see in the month of March, Bitcoin has risen quite nicely. And what's important is that it broke this cycle of falling tops, starts to build rising bottoms, and now breaking up through resistance from a rising bottom. So as I said last week, I have gone to a bullish rating on short and long term for Bitcoin and some of the other cryptocurrencies as well. Hey, I hope you're enjoying this video. If you want to learn more about how I trade the market, how I invest in the market, I encourage you to join me for one of my free presentations. They're more like an hour long, a deeper dive into trading, and you're going to learn some really valuable things that'll help you do better in the market. To register, they're all free. Go to Stockscores.com, go to Trader Training, upcoming events, and there you will see a list of all the different events that are coming up, and you can register online right away. You'll get an email confirmation, and I'll see you at one of those presentations. All right, let's do that day trade of the week. It wasn't a great week this week for day trading. Not a lot of action going on. We are in that doldrums when there's not a lot of earnings announcements coming out. But this is one stock that managed to do fairly well. We're going to take a look at a 2-day chart. And the lesson I want you to take from this is that if you're going to be a buyer in a market that's weak, and so we can call the small cap market weak, and yet this is a cheap stock, a small cap stock, that did quite well on Friday. Well, why? Because it's an alpha stock. Alpha stocks are those that trade on their own story. The telltale sign of an alpha stock is abnormal volume. So this is Friday's volume, and this is Thursday. All right, this is a 2-day, 2-minute chart. And notice that we had an initial move up, a pullback, and then a break of the pullback. So I call that a hit and run strategy. One of the strategies I teach in the Active Trader course. We have tools to find these things, and of course, knowing what the patterns are. Then there was also an intraday pullback strategy, break right there. So you had a couple of opportunities with different strategies to get into this stock. Question is always asked, when you sell? Well, you can do a couple things. You can sell when the trend line is broken, which was right there, or you can sell when there's a breakdown from a falling top, which was right there. You had a high, a little falling top, then a break of the trend, another falling top. So there was a number of sell signals, this one and these, and that ultimately led to the market going lower. And again, these are things that I teach in the different courses that we have online at Stockscores.com. Well, hope that you've enjoyed this week's vacation edition of my market analysis. I'll be back to normal next week, so make sure you're subscribed to the channel. I do these videos every week, and also have some more broad educational videos about how to trade and invest in the stock market. So subscribe to the Stockscores YouTube channel, like the video if you enjoyed it, but most importantly, trade well.